Good evening, traders, and welcome to our show After Hours with Berries. Before we start with our usual charts and all, make sure you visit the first link in the description below and subscribe to our weekly newsletter, Berries Weekly, so that you get to know a lot of other things that we explore in the financial markets as well. And on with the show. So, like I had mentioned yesterday, Bank Nifty is in this green zone, which has been acting one way or the other in Bank Nifty, and there was a green candle. And my yesterday's short position did not work. It hit the stop loss, but today, in fact, it would have given me max profit. So, but it's again hindsight trading. But the larger structure still remains intact. We are still stuck in a range. Volatility is still not sufficient to drive the index on either directions. So I think for some more time we will see Bank Nifty rotating within this blue box itself. Moving on to Nifty, I similar story there as well. Did I move my levels? No. Okay. So, but today, in fact, Nifty has crashed more than Bank Nifty. If you can see on the right hand side, 0.93% fall against 0.77%. Most of it, I'm guessing the differential is mostly contributed by Reliance, which corrected by about 2.5%. We will see Reliance's chart as well. But on the Nifty, this broader range holds, and as I said, we will see more rotations within this range for some more time. Though this is a really large range to trade, and due to low volatility, there is not enough premium in the options market for positional traders to sell this range. But one can still look at reactions of the index as the index rotates within this. Let us go to Reliance first, since I just mentioned that is probably the biggest contributor of the down move here. And as you can see, after 3 days of nice up move, again we have seen a very sharp sell off. Though we are still holding this 2300 level, I think the more time Reliance spends here, I think the probability of 2320 breaking sort of increases, because we have seen a continuous fall off since November. So if a strong buying does not come here, I don't think Reliance will rally much. Well, it might just rally up to this 2500 level, but looking at ATH levels, I don't think they are coming very soon just yet. Another stock that I wanted to look at, and which has also corrected quite a bit in the past 2 days, or rather since mid Feb in fact, but this 2 days fall was quite sharp, is Bajaj Finance. And the reason being, again, sort of confluence of two setups. One is this ATH, a previous ATH rather, which was then broken, and then we saw this pretty good rally, and another one is this trend line, and those two sort of intersect somewhere in this region. So it again sort of puts Bajaj Finance in a position where risk reward once again becomes very favorable. And even if I am to just probably take an entry here tomorrow and keep a very small, maybe 5% stop loss, I can very easily keep the target of above 6, 7, 8%. In fact, this peak, this swing high, previous swing high, gives about 10% RR, but we will see whether to take the full position or not. But I think this also makes a pretty decent setup to be traded in cash market, of course. And just to go over the rest of the market, most of, I think, metal 0.06% move we can simply ignore. The rest of the market is just sold off quite heavily. Realty, PSUs, Nifty IT, the sectors which were doing well at the beginning of this month have been doing quite poorly. Even the positional trades that I have taken on the short side are doing well. So I think we are in a bit of a negative sentiment sort of territory, but I don't think that will last much. Today's down move was mostly due to, I think, overextension of options market, where a lot many puts were written than were strictly necessary at this kind of level. So I'm guessing that put sell off, or rather extra call writing, is what drove the index down. We will see how the market goes here on out. But yeah, if by the way, this is not related to trading, but if any of you have SIPs or something going on, do not stop them because of this market movement. You never know, you can never time the market. SIP is probably one of the safest ways of investing in stock markets. If you have SIPs or anything like that going on, please do continue. That being said, for short term traders, well, charts is where you should spend a lot of time and see which kind of setups play out, which setups give decent risk reward, and so on. So I don't have any other setups just yet. So I think we will wrap up the show here, guys. Thanks for tuning into After Hours with Berries. This was Gandhar. Make sure you like this video, share it with your friends and family, subscribe to our YouTube channel. Let me remind you once again to subscribe to our newsletter, which will be the first link in the video's description. Thanks for tuning in.